shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important, and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable, it's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning to all of you, especially those of you on the West Coast. It's some morning for you. Those of you on the East Coast, good afternoon to you. Excuse me, just as I started talking, I kind of got a little tickle there in my throat. Got to get it cleared out there. Welcome to all of you as we get into our day number 11 of the Pick Winning Stocks Challenge. Day number 11, coming to you live from Nashville, Tennessee. I'm Jeremy Whaley, founder of Trade Maestro. And it's great to have you with me today. We're going to do a little bit of look at the market. We're going to take a look at what's going on, down another 1,500 points today. Is it the end of the world? Of course not. It's never the end of the world. They just say it is. But we're going to take a look at that, and then we'll get over into our Pick Winning Stocks Challenge, day number 11, where we're going to talk about how you can double your ROI by making one simple adjustment. So continuing to give you kind of an immersive entry into what we do here at Trade Maestro and how you can approach the market and improve your trading as you manage it all yourself. All right, with no further ado, let's jump in and take a look over here at the market. You should be seeing my screen now. This is the Dow Jones Industrial Average. I'm going to zoom in. Well, we're only down 1,200 points now. When I looked at this about 5 minutes ago, it was 1,700. So you can see right here, there's a long lower candlestick shadow as that buying pressure is building. Now, I've been talking to you about this, making a big deal about how important support is. We talked about that all week last week. And these long lower candlestick shadows, I'm going to draw it over here like this. Maybe it's a bearish candle, but that long shadow actually shows buying pressure. That is your buyers coming in, okay? So whenever we look at a trade like this, or we look at a candlestick like this, anytime you look at that long lower shadow, the inclination, the first inclination people think is, oh my goodness, look how low it traded today. But it's actually not the real story. The story is, oh, look how much buying pressure came in. And let me see if I can get some big numbers for us here. I think it was down 2,200 points or something, 2,300 just a little while ago. So the opening price was 39,996, and our low was 38,422. So, well, gosh, that's more math than I can do on the fly here. Doesn't matter. We were down as much as we were from the low 38,427 to current. We were back up about 600 points. And that's the story that I want you to understand is while we were down all that distance, what this long lower shadow represents is a $600 buying pressure, or 600 point pressure to the upside of buying. And that's important in terms of understanding the sentiment of what's going on with the trade. It's important in terms of understanding that we can't get caught up in the news media. We can't get caught up in what other people want us to think about it, but rather just interpreting the information as it's coming in. Okay, this is not the end of the world. I know we're down 1,400 points. The media is going to go crazy with it because that's what they do. You got to know that. You got to dissociate from that. What you have to look at here is you have to look at what's the actual sentiment. Now, if we end the day and we've got, let's say that our candlestick looks something like this. It's a bearish candle, but we have a long lower shadow that's like that. That's actually a really good sign. That suggests that maybe there's going to be more buying pressure coming in tomorrow, and maybe we'll actually start to rally here, and this could very well be the bottom. That's what we've seen so many times where we've seen these explosive breakouts to the downside that didn't follow through. Or, as I talked about on Monday, it very well could be that this candlestick right here represented the bottom for the short term, and we're going to rally and we're going to consolidate in here for potentially maybe the majority of the month of April. It could go on like this for several days, maybe even a couple, 2 or 3 weeks. And then maybe it breaks back out to the downside, or maybe it breaks to the upside. We're going to have to find out whenever we get there. But the key thing to understand is maybe we're not out of the woods yet, but we're also not lost in the woods. We're not lost out here saying we have no idea what's going on. There's a defined structure. This is trading extremely well disciplined right now. We're very much within that structure, and really nothing looks that surprising as far as I'm concerned. As I zoom out just a little bit here and you look at your stochastics, which is your momentum oscillator, you can start to see that it's trying very hard to make the turn. It really is trying to actually go in a bullish direction. It's still not a buy signal based on the rules that I use, but definitely is trying to shut this down and see if we can't start moving in the other direction. Let's take a look over here at the S&P 500. Same story. If you look at your stochastics, it's actually starting to cross right now. Just barely hasn't crossed, but it is very much trying to. As I've been saying all week, it's the same song, just a slightly different verse. But, large gap down this morning. If you can't see that, there it is right there. We traded pretty bearish for a while. The bulls are trying to fight back right now as far as midday is concerned, and we'll see where we end this afternoon. And then for the NASDAQ, it's pretty much the same thing. They're all the same right now. A little bit different, but all pretty much the same. This one, the stochastics, has crossed to the upside. It has actually crossed to the upside, and showing that it's definitely trying to get that bullish momentum coming back in. There's also a phenomenon happening here. I don't love the location because normally when I talk about divergence, I want to talk about it after it's been a big bear trend. But even though this hasn't been a big bear trend, you do have a divergence that's happening where your oscillator is starting to make higher lows, where your stock, in this case the index, is making lower lows. Let's see if I can find my MACD in here. It's not showing up on MACD. So I don't think we need to think anything about that divergence. It's really nothing to report on right now. And it's really not quite the right location. So I think that's just a fluke in the way that the momentum oscillator is trying to adjust to all the volatility. So that's where we are in the big picture of things right now. Still relatively bearish, but definitely trying to get some bullish momentum here. If you look down my board on the right side here, you see pretty much everything's bearish. All of our top 10 are to the downside. We pulled out one bullish trade this week, and that was Dollar General. This is what we did on Sunday night, and it has been basically a no-go. Has not moved in the direction of our bullish direction, but it has been also not very bearish. It's holding strong here. So that's the only bullish option that we had on the table this week. Everything else was bearish, and everything is trading to the downside. You can see, I'm just going to hit a couple of these. AbbVie was one of our trades from Sunday night. It's way down. Where's my trade setup? Why is it not showing up here? I have no idea. I must have clicked on a different, I don't know where my AbbVie trade setup went. I'll have to go back and find it. Oh, I know why. We didn't do it. We ended up not doing it because earnings were coming up. Amgen is here. Amgen was one of our Sunday night trades. You can see we've already blown through one target, almost to a second target on that. Boston Scientific was one, setting up nicely for our bearish trade, but hasn't quite confirmed it yet. Costco was another one, down $8 today. It actually bounced early in the week. We triggered this on Monday. That one's kind of a pain because it did kind of whipsaw us there a little bit. Expedia, moving to the downside. All of these are moving in the right direction as of the moment right now, okay? So that's where we are. We're back down 1,600 on the Dow, so definitely some noontime volatility happening on the big picture index as it appears and as it sets up here for the day. All right, if you got any questions about that, type it in there to the chat. I did put in the chat links for the Trade Maestro Ultimate Trading Cheat Sheet. I put links in there for TradingView. If you haven't signed up for that yet, go get your free account because there's no reason not to. And I also put links over to our website over there. If you're over on Rumble, drop a line. Let me know how you're doing over here. If you're on YouTube, drop a line. Let me know how you're doing. If you don't mind, like and follow for all of these channels because we're definitely trying to build the following. And the more that you do that and the more that you chat, the better the algorithm works. And it just helps everybody. It doesn't cost you anything to do that. So, just go ahead and follow right now or subscribe, whichever one that it is that you need to do. And then that's going to help you and it's going to help me. And then we can all be one big happy family. All right. I do have one more announcement before we get into the Pick Winning Stocks Challenge. I mentioned this yesterday, and I'm going to continue to mention it today and tomorrow. On Monday, this coming Monday, and I'm putting this out there because I don't have everything ready to make the announcement yet, but Monday I'm making an announcement of what we're going to do with this channel moving forward after next week, because next week is week 3 of the Pick Winning Stocks Challenge. Actually, it's going to go a little further than that because we've got... we have some weekend days that we'll have to make up, so that'll push us into the 4th week. But I'm going to make the announcement of what we're going to do with this channel, what my vision is for it, and that's going to be really exciting. And I say I'm going to make it on Monday. Still have some stuff to get ready for that, but we're going to make the announcement on Monday. I believe it's going to happen. All right, let's jump in. You should be seeing my screen for the Pick Winning Stocks Challenge. We are getting into day number 11. Day number 11. And that means we're going to talk about making one move to double your ROI. I'm just curious. Those of you who've been with me for the last 2 weeks now almost, we're just a day shy of 2 weeks. How many of you have learned something already in this challenge that if you were to take it and implement it, you feel like that would absolutely take my trading to a different level? Or maybe it's a conceptual idea. You're like, okay, I see the concept. Maybe I haven't quite internalized it yet, but I see the idea. And yeah, if I implement this, this would take me to another level. If you can agree with that, type into the comments, say next level. Just type in there, next level. And I'll tell you the story of a longtime client of mine, somebody that I started teaching 2010, maybe 2009, like a long time ago, way back in the beginning when I started teaching. And he's done great over the years. But he sent me an email last night, and I don't know if it was from my email list or from just following me on social media, but he happened to catch part of yesterday's session, and he sent me a message and said it was great to hear me again, and just kind of give me an update. He's doing great. I mean, he graduated years ago, right? I mean, he's been off and doing fantastic with his stuff for years. But what was funny about his emails, he said, I can't believe you're giving this stuff away on YouTube for free, and I paid thousands for it all those years ago. And I'm like, well, I know. It's like people don't know what to appreciate, but it's true. I used to charge thousands of dollars for the stuff that I'm sharing with you right now, and that's why this challenge is so valuable. If you'll take it and you'll internalize it and you'll apply it, then what you'll discover is this will truly take your trading to an unbelievably higher level. So with that said, let's get into one move to double your ROI. Let's do a quick recap here. We've been talking for the last couple of weeks, actually for this week. Last week we talked about market structure, support and resistance, talking about the trends. This week we've been talking about strategy. And we said that strategy is how we play the market. We said there's 2 basic strategies. You can buy a stock long, you can buy crypto long, you can sell it short. Buying long and selling short, those are your 2 basic strategies. And then we talked on the next day about that, day number 2, whatever day that was, Tuesday. We talked about pivots, and we talked about trading and kind of your basic concept of trading from pivot point to pivot point, trading pivot to pivot. Yesterday, we went into a great session on how you beat the market, how you beat the index, and how we do it with ETFs. And of course, for me, I think that the session we went through yesterday, that's the most life-changing information you can have because it's easy, it's simple to do, anybody can do it, and it really will, if you implement it, put the financial deal, I'm using air quotes, the financial planning world out of business because they are not competing. And to me, that's actually... it's just a great tragedy. So please learn what we talked about yesterday. So the question is, how can we really, really outperform everything? I mean, I've shared a bunch, but what can we do to double our ROI? What can we do to just blow it out of the water and make it even better? And I want to introduce you to a concept that you're probably familiar with. If you've ever done a whole lot of investing, if you've read real estate books, if you've read any of the books that talk about financial IQ and, being prepared to, take your financial world to another level, you've heard this term. And the term is OPM. How many of you have ever heard of opium? And I don't mean the drug. I don't mean the stuff that makes you feel happy. I mean, OPM stands for other people's money. Other people's money. Now, you're familiar with this in the form of a home loan. Whenever you buy a home and you go get a home mortgage, That is other people's money. You say, I want to go buy a $500,000 house, but you don't have $500,000 sitting around. And the bank says, well, if you come up with 80,000, we'll match it. We'll give you 420 and you can go close on your loan. And now you own your home. You can pay us off over time and you're using our money, but you can buy your home. That's a mortgage. Everybody understands the idea of a home loan and a mortgage. Now, there's all sorts of different ways that we can use other people's money in the world of finance. In the world of trading, when we talk about OPM, other people's money, we're specifically referring to using brokers' funds, brokers' money. And there's a term for that. There's a technical term, a term that actually gets confused a lot because there's a few ways we can use it. But the term that we use is margin. Margin. Okay. Now, why does it get confusing? Because there's a couple of different types of margin. The type of margin we're going to talk about right now is margin where you borrow from your broker and you buy stock, you buy equity with it, and then you actually get to benefit because you're able to buy more equity, more stock than you could have because you have more money to work with. That's the kind of margin we're about to talk about. There's another form of margin, which is more like a deposit. And this is the type of margin that you're going to see in the world of futures trading. If you trade futures or if you trade Forex, that's a different type of margin. You're not necessarily borrowing money from the dealer or from the broker, but rather what you're doing is you're putting money down and you're saying, I'm good for it in the future. And then you get to participate in the trade. So it's more of a deposit, like, I'm going to come back for this. That's the kind of margin that you deal with in futures and in Forex and even in certain types of options trades. When you get into shorting options and you have to have a margin set aside, that's just saying I'm good for the money. And you're putting a certain minimum amount aside to say I'm good for it. In the world of stock trading, specifically buying stocks, when you're buying stock and we're going to use margin, what we're doing is we are borrowing from the broker. Now, to do this, you must have $2,000 in your trading account. Not $2,000 to your name, $2,000 in your trading account. And if you have a $2,000 or better trading account, then you should be eligible to trade with margin. What will happen is your broker will literally double your buying power. They will double your buying power. We call that 50% margin. Instead of having to have the full amount, you have the ability to put up 50% and your broker will put up the rest of the money for you. So, for example, if you have $10,000 in your account, they will let you buy $20,000 worth of stock. You say, how can they do that? Well, they're the broker. They can do that. Okay? That's what buying on margin is. When you buy on margin, you are putting up half the money and you're letting the broker put up the other half. Now, again, this is not a strange concept. We do this often. You do this in all sorts of areas of your life. If you've ever had a home loan is a type of margin. They don't call it that, but that's what it is. When you think about your home loan, let's say that you had a $500,000 house and you put $100,000 down. That's a 20% down payment that you're putting into the property, right? You're putting the $100,000 up. The other $400,000 is made up by the bank. So that's a 4-to-1 margin ratio. You have a 25% stake. They have 4 times that. Okay, it depends on how you look at it. They're risking $400,000. You're risking $100,000. If you look at the total value, it's a 20%. Well, let's not get into the details, but you understand the idea. You're putting up $100,000. They're giving you an additional $400,000 value or cash to buy the rest of the house. That's how a home loan works. It's the same concept for trading margin. It's just that the value you have to put up is 50%. Now, before we get into details, did you know that you can actually do something very similar like this with crypto? There's several companies that are out there that will lend against your cryptocurrency. People keep asking me, why would I buy crypto? Why would I put all this money in crypto? It's so volatile. There's nothing I can do with it. I can't spend with it. Well, actually, you can. Now, those of you who are crypto fans, you already know this, but those of you who don't know this, I'm going to share it with you right now. There are companies that are out there that, let's say you had $100,000 in Bitcoin, they will let you borrow 50% of that value in fiat cash. You maintain ownership of your Bitcoin. Your Bitcoin is the collateral for the loan. And as Bitcoin goes up in value, guess what happens? You can take some out and you can pay off the loan, or you can pay off the fiat currency loan with other cash if you want to. It doesn't matter. But you keep your Bitcoin position and you withdraw in the form of a loan, which now is tax deductible because you got interest on it, all sorts of other things, the benefits of that, right? And so it gives you liquidity against your crypto while you're still going out there and benefiting from some of the gains. It's just a little side note for you, kind of related to what we're talking about here. All right, let's talk about some details of margin. That was a rabbit trail. It'd be easy to get lost on that one. If you have a minimum of $2,000 in your account, oops, I just went the wrong way on my slides. Let's go this way. Here's some details. What margin does is it doubles your buying power. Margin doubles your buying power. There is no credit check. You do not have to fill out a form. They're not looking to see if you're current on your taxes. They're really not even looking to see if you're a legal citizen. As long as you have your trading account, as long as your trading account's in good standing with your broker, you are eligible. $2,000 minimum, you immediately have twice the buying power. No credit check. You are responsible, though. You are responsible. So whatever the amount of money is above and beyond your deposits, you are responsible for that. And if it falls below that, then you're going to have what they call a margin call. And in the case of stock margin, you will pay an interest on the borrowed funds. And different brokers require different rates. Different brokers require different rates. Now, the technical amount is 50%, but you will be required to maintain at least a 30% equity. And we don't need to go down those details right now. I just want you to get an idea of what's going on. So you will pay interest on the borrowed funds, and there's a minimum margin that will be required. Okay, now the question becomes, is it worth it? And I want to, again, differentiate just a little bit. The margin I'm talking about right now is stock margin. If you're going to buy stock on margin, you're borrowing from the broker to execute the trade. It's different than futures margin. It's different than options margin. It's different than Forex margin. In those other markets that I just mentioned, you do not pay interest because it's not a loan. In this case, it's a loan. So I want to make that differentiation so you understand that. Okay? So the question becomes, is it worth it? And the answer is maybe. Maybe. Let me give you some examples. I'm going to keep it full screen, so hopefully you can see the details here. Let's say that you were trading SPY and you wanted to buy at 260 and you had this great trade on the line, and let's say you're going to trade it up to 320. Now, you didn't maybe know it was going to go to 320 at the time, but you wanted to make a great bullish trade here, one that we talked about yesterday. Here's your options. Choice number one, you go buy 100 shares, and since you're buying it for $260 a share, 100 shares is $26,000. Then let's say you sell your 100 shares for $320. You bring in $32,000. You bought it for $26,000. Your profit is $6,000. $6,000 divided by your $26,000 immediate or initial trade, initial capital, is a 23% ROI. Not too bad of a trade. Most of you would be happy to do that trade. If you did that over an 8 or 9 month period, you would say, I won for the year. But there's another way to look at it. Let's take the exact same trade and say we did the same trade on margin. So we're going to buy 100 shares at $260 a share. That's $26,000. But in addition to that, we get to buy an additional 100 shares at the same price for $0. No money out of your pocket. So that means that you get 200 total shares at $260 for $26,000 cash, plus you have a $26,000 margin position for a total of $52,000. Now we come behind it. We sell all 200 shares for $320. We bring in $64,000. We bought the 200 shares at $260, which is a $52,000 cash position, but we also have to repay our margin, which was $26,000, though our profit is $12,000. Now, compared to the first trade, that is double the ROI. You make a $12,000 profit based on a initial cash position of $26,000. So you doubled your ROI. You got a 46% instead of 23%. Now, even if you grew up in the South like me, and maybe you're not so great at math, all of you understand that is actually a lot more money. 46% is better than 23 for most of us, right? That's exactly what margin will allow you to do, which by every account means it's absolutely perfect, right? Well, like I often say, there's so many great things in the market, but none of it's perfect. Assuming your trades only go up, this is easy, found money. And if your trades only go up, there is zero reason to not trade on margin. If your trades only go up, everybody should be trading on margin. But it's not reality. The reality is trades do go down. And let's just take the same stock right after that move. And this was the COVID crash. And we went from 320 right back down to 260. So what would have happened if we had done this on margin? Let's say you didn't buy at 260, but now we bought on the wrong side. Let's say we did this at 320. We bought at 320. We buy our 100 shares for $320 a share. We spent $32. That would have given us a loss of $6,000 when we cover them or when we sell them at 260. So we got a loss of 18%. But if we did this with margin, it would be twice as bad. If we did this same deal with margin, you'd buy 100 shares at 320, so that's 32,000. You get an additional 100 shares at 320 for $0 because you're on margin. But now you got 200 shares with 32,000 cash position and 32,000 margin. So your risk on this trade is now 64,000. When we cover, or when we close them, we sell all 200 shares, bringing in 52,000. We repay our 32,000 margin. We're left with 20,000, and our loss is $12,000, which accounts to a 37.5% loss. Yikes. Holy smokes, that happened quick. You mean I can double my money or I can double my loss? And the answer is yes. You can double your money and you can double your loss. And that is the good, the bad, and the ugly of margin. I love margin because you can double your ROI. I don't love the extra risk. However, it doesn't mean you shouldn't use it. I will give you a personal story, though. Some of you have heard me share my story of Cubist Pharmaceuticals that I did back in 1999, a company that's no longer, well, they're not really out of business. They just got acquired by, I think, Merck. They merged with Merck. Or Pfizer, I forget who. They merged with somebody. Anyway, but Cubist back in the day was a up-and-coming pharmaceutical company. This was the late 1990s. It was 1999, summer of 99. And at the time, I just learned this technique. Just learned it. And what I did is I was able to get my account just over $2,000 so I could buy on margin. And I decided that Cubist was the stock I was going to buy. I did not know what I know now, and I put everything in. So I was able to buy for around $7.50 a share, give or take. I mean, this was 25 years ago. I can't remember exactly, but roughly $7.50 a share. And I bought all $2,000 worth. Literally, it was, maybe a few pennies less than $2,000. Bought as much as I could buy, all in on Cubist Pharmaceuticals. Now, I was in college at the time, and we didn't have laptops like we do now, so I was running back and forth between classes, going to the computer lab, checking my trades, okay? That was my style of trading in 1999. And what would happen is I bought the trade late in the day on one day, and the first day it went up substantially, like, maybe from $7.50 to $8.20 or something. But percentage-wise, it's a pretty good move. And I'm watching my account go up, and I'm like, yes, this is it. And I'm like, in my mind, I'm dropping out of college, I'm quitting everything, and I'm moving to the Cayman Islands. I mean, like, in my mind, this was the holy grail for a 22-year-old, 21-year-old, however old I was at the time, in college, senior in college. Like, I figured it out, right? So I thought I was really on cloud 10 here and had survived. Figured it all out. Anyway, fast forward a day or two into this deal, and things started to turn. And next thing you know, it's down below my entry price. It's down below $7. It's in the $6 range, like $6.50, maybe $6.20. And I tend to remember $6.20 might have been the amount. But for whatever reason, you know, it had dropped down a lot, and percentage-wise. And because I was leveraged to the max, full margin, and I had bought everything in my account's looking really, really anemic right now. And it was down to like maybe $1,500 or $1,600. So I was below the margin minimum at that point. Now, they didn't give me a margin call. I just panicked and I sold. And it was in that moment that I realized the negative impact of margin, because I didn't fully understand yet. Nobody had taught me this. I had read about it, I learned about it, but I didn't understand it. And it was in that moment that I realized, oh, I only have $1,600 left in my account. I was no longer over $2,000. I was below the $2,000 minimum. So I lost my ability to buy a margin, but I had lost all this money. I had lost twice as what as I thought I would have lost because I had doubled down on margin. So that was my lesson, baptism by fire in margin. And where it spiraled to, if you haven't heard the story, where it went to from there is I freaked out. I thought, oh, I got to make it up. And so I started doubling down and trying to, make it up and chasing trades. And my $1,600 account goes down to $1,400, $1,300, $1,200, $1,100, $900, $800. Next thing I know, I'm like, I'm going to buy some penny stocks, because I was hearing about all these penny stocks in the late 90s. And so I started buying penny stocks, and I didn't have a clue what I was doing. And eventually, I think I ended up with like $200 or $300 in that account. I left it all in some penny stocks that did nothing, and I walked away from trading for about 8 months. That was the first account that I traded, and it was the first account I blew up. And it all started with not understanding margin. So that's why I'm sharing the story. That's the ugly side of margin. But the question is, should you use it? And I think this is a personal choice. This is a personal choice. You don't have to be afraid of it. The interest rates are relatively low. I mean, they're going to be like a prime plus. So, it might be 5, 6, 7%. It just depends on what rates are at the time. And different brokers have different margin rates. But if you're doing margin for day trading, for example, and I didn't even talk about that, but if you have a day trading account, a $25,000 pattern day trading account, they will give you 4 times the margin. You can actually, with a $100,000 account, you can buy $400,000 worth of stock. And it gives you a ton of buying power. And it absolutely is a benefit to the ability to trade and execute trades and make money faster. Is absolutely a benefit. You just have to understand the drawdown of it and the risk. If you're day trading with margin, you're paying such a small, tiny amount of interest, it's not even worth worrying about. I mean, I don't even know day traders who think about it. They just do it. Like, they don't even think about the interest, because it is such a minuscule amount. You're in the trade for, in some cases a matter of minutes, in other cases a matter of hours, but you're out by the end of the day. I mean, you paid 3 hours worth of interest on $85,000. I mean, it's just nothing. It's not even worth worrying about. It's nothing. Now, in the example that I gave here, where we bought an extra 100 shares of SPY, and in that trade, if you tracked with it, which you may not have noticed, but it was about a 10-month trade. So the truth is, in that scenario, it's maybe not as friendly. If you're buying and you're holding big, long position trades for 8, 10, 12 months at a time, now the margin does start to stack up. And now it is becoming more significant. So those are kind of two extremes. One extreme is day trading. You're never going to notice that you're paying margin interest. The other extreme is you're holding it for 8 or 10 months or a year or longer, and now you're starting to pay interest on that like you would a mortgage. And it's starting to add up. And if you're trading big amounts, $100,000, $200,000, $300,000, $400,000, it is mortgage interest. I mean, it may be the equivalent of several $1,000s a month that you're paying in margin interest. And that's not worth it. I would never, ever think about doing that. That's just fighting your trade. I mean, okay, so you doubled your ROI. You went from a 26% ROI to a 46%, or whatever the numbers were, 23 to 46, I think it was. But so you double your ROI, but in the process, you give up 8 or 10% of the overall amount on margin interest. That makes no sense. Like, that's just not worth it. So for a long-term trade, if you're a position trader doing long-term, more buy and hold, even though that's not really what I teach, but if that's what you're doing, I would never really consider trading with margin like that. But I do think it's a personal choice. If you're making money, it's a way to double your profit. If you're doing it for short-term trades, it's a way to double your profit. If you're not making money, it's going to hurt really, really bad. So what is my opinion on using margin? Here's my opinion. I always open a margin account. I don't have any trading accounts that are not margin. Every trading account I have opened since 1999. The first one started off not margin. I turned it into a margin account, and ever since, every trading account I've ever opened, I've opened as a margin account. Every one of them. But I usually don't use it. The reason I have it is because you want it when you need it. And there have been times, there's been more than one time, where I needed the margin. I was in a situation, I needed to maneuver a couple trades this way or that way, and I needed the margin. So that's why I always open a margin account, because sometimes it's useful to have. The other reason it's useful to have is certain types of trades that you want to place. You can't do short trades if you don't have a margin account. If you want to place a short trade, and I highly encourage you to at least learn it, even if you don't become a short trader, I highly encourage you to learn it. If you want to do a short trade, you have to have a margin account. There's certain option trades that you need a margin account. And it's a better position to be in to say, I've got the margin account, I've opened it. I'd rather have it and not use it than to need it and not have it. So that's my opinion on if you should open a margin account. Okay. If you like to buy stock, you like to hold it, you like to come back months later, I would absolutely not use margin. If you manage your risk and you're doing fairly short-term swing trades and you understand the implication of margin, and by fairly short-term swing trades, I'm going to say anything from day trading up to I'm in the trade for 4 to 6 weeks, that kind of a trade. If you're doing short-term, 1 to 2 months at a time, and that's it, and you understand the risk, that's the key right there. You got to understand the risk that you're taking. If you understand it and you know how to manage it, there's absolutely no reason you can't trade with margin. You can do it very effectively, and it's probably worth doing. So there's my position on that, and it kind of lays it all out. It's a great tool to double your money. It's a great tool to get more leverage, to increase your ROI. Is it for everybody? No, it's not for everybody. Should everybody use it? Probably not. Everybody should use it. Should you use it? It's a personal choice. All right. All right. Any questions about that? Any questions about margin? Any questions about anything we've talked about so far? It is a strategic idea to jump in there and use to double your income. It's not for everybody. So I felt like it's worth talking about because, well, I need to talk about it. I mean, if you're going to be a trader, if I'm teaching you how to trade, you got to understand margin. You got to learn about it. But doesn't mean you need to use it. So now we've talked about it. It's part of the strategy options or choices. And that's why we teach it in this section of the Pick Winning Stocks Challenge. All right, if you don't have any questions, then we won't hold you too long today. But if you do got any questions, type them in there. Hello, Mia from Calgary. It's great to see you, my dear. And no comments over here on Rumble. But if you got any comments, just put them in there and let me know. If you've not liked and subscribed, please like and subscribe and follow. Like, subscribe, and follow. Why? Because, well, you want to stay updated. You want to get the notifications too. Turn on the notifications in YouTube so that it will send you those alerts and let you know that, hey, we're live, because you're going to want that. All right, I don't see any questions coming in here. I don't see them coming in on either side, so that means we won't answer any questions today. If you do have any questions, feel free to come back tomorrow and ask it, or send me an email, jeremy@trademaestro.com. Thank you guys for being here today. I hope you have a wonderful afternoon. I look forward to seeing you tomorrow. And until then, I wish you the best. Happy trading to all of you. We'll talk to you soon.